Imagine this. It is the second Wednesday of January 2026. Margaret, a 71-year-old widow from Ohio, walks slowly to her kitchen table. She pours her coffee. She opens her laptop. She has been waiting for this morning all year long, because today, her brand new Social Security check should arrive. The one with the 2.8% raise, the one the government promised back in October. She logs into her bank account. Her hand is trembling a little. Not from fear, from excitement. And then, she stops. She blinks. She looks again. She puts on her reading glasses. She refreshes the page. The number is barely bigger than last month. Not by much, just a few dollars. She whispers to herself, "Where is my raise? Where did my money go?" Her heart begins to race. She wonders if the bank made a mistake. She wonders if Social Security forgot her. She wonders if someone stole from her account. But here is the painful truth, my friend. Nobody stole anything. Nothing was lost. Margaret's raise was real, but before that money ever touched her bank account, Medicare quietly took most of it away. And this is happening right now to almost 71 million Americans. If you are sitting at home looking at your January, February, March, April, or May deposit and asking the same question Margaret asked, please stay with me, because today I am going to explain exactly what happened, why it happened, and most importantly, what you can still do about it. Hello, my name is Masha. I am a senior policy analyst, and on this channel, Tax-Wise Seniors, my only job is to help you understand the complicated rules that affect your retirement, your benefits, and your money. Today, I am going to walk you through the 2026 Social Security COLA increase in plain English. I will show you the exact math. I will show you the rule that protected only a tiny fraction of seniors this year. And I will give you the 3 steps you must take this week to protect what is left of your raise. And please, please stay until the very end, because there is one hidden mistake that many seniors are making right now without even realizing it. And this single mistake could cost some of you over $5,000 a year. I will reveal it in the final part of this video. So please, get comfortable. Pour yourself a cup of coffee, like Margaret did, and let's begin. Before I explain the rule, let me tell you about Robert. Robert is 68 years old. He lives in a small home in North Carolina with his wife Linda. He worked for almost 45 years as an electrician. He paid into Social Security every single paycheck. Robert is a careful man. He reads the news, he listens to the radio. He even printed out the SSA announcement back in October that said the 2026 raise would be 2.8%. He did the math at his kitchen table. His check was around $2,000 a month, so a 2.8% raise should give him about $56 extra every month. He told Linda, "Honey, that is almost $700 more for the whole year. We can finally fix the leak in the roof." Linda smiled. They planned for it. But when January arrived, Robert's deposit was not $56 higher. It was only about $38 higher. Robert called the Social Security office. He waited on hold for over an hour. When the agent finally picked up, she explained something Robert had never heard before. She said, "Sir, your raise is correct, but your Medicare Part B premium also went up. That premium is deducted from your check before we send it to you." Robert went silent. He felt embarrassed, he felt angry, and he felt cheated. But here is the thing, my friend. Robert was not cheated. Nothing illegal happened. He simply did not understand one rule. One quiet rule that took most of his raise before he ever saw it. And that one mistake is costing Robert and Linda real money this year. So let me explain that rule now, so the same thing does not happen to you. Here is what happened in 2026, step by step. On October 24, 2025, the Social Security Administration announced the official cost of living adjustment for 2026. That number was 2.8%. This is confirmed on the SSA's own website, in their 2026 COLA fact sheet. For the average retired worker, the monthly benefit went from $2,015 a month up to $2,071 a month. That is a raise of about $56. So far, so good. But just a few weeks later, the Centers for Medicare and Medicaid Services announced something else. They announced the standard Medicare Part B premium for 2026, and that premium jumped from $185 a month all the way up to $290 a month. That is an increase of $17.90 every single month, or roughly 10% in just 1 year. Now, here is the part most seniors do not realize. For almost everyone receiving Social Security, the Medicare Part B premium is deducted directly from the Social Security check before that money ever reaches your bank account. So let's do Robert's math together. Slowly, his raise is plus $56. His Medicare premium increase is minus $17.90. So the real true increase he sees in his bank account is only about $38 a month. That is what happened to Margaret. That is what happened to Robert. And that is what happened to tens of millions of seniors across this country. But it gets worse, because the Medicare Part B annual deductible also went up. In 2025, the deductible was $257. In 2026, it is $283. That is $26 extra dollars you must pay out of pocket before Medicare starts covering 80% of your doctor visits. So when you add it all up, the premium hike, the deductible hike, and rising Medigap premiums in many states. For many retirees, the entire 2.8% raise has already been swallowed before March even arrives. Now, you may have heard about something called the Hold-Harmless Rule. It sounds protective, it sounds reassuring, and many seniors believe it shields them from Medicare price hikes. But I have to be honest with you. In 2026, this rule will protect only a very small group of people. Here is how it works. The Hold-Harmless Rule comes from Section 1840 of the Social Security Act. It says that your net Social Security check cannot go down from 1 year to the next just because Medicare Part B went up. Sounds great, right? But there is a catch. The rule only protects you if your Medicare premium increase is bigger than your Social Security raise. And for 2026, the math is brutal. The Medicare increase is $17.90. To be protected, your 2.8% raise has to be smaller than $17.90. That means your monthly Social Security check has to be $639 or less to qualify for full hold harmless protection. That is according to AARP and the Medicare Rights Center. The average retiree gets over $2,000 a month, so most of you watching this video right now are not protected. And here is something even worse. There are 4 groups that the Hold-Harmless Rule never protects, no matter what. If you are new to Medicare in 2026, you are not protected. If you pay your Part B premium by quarterly bill instead of through Social Security deduction, you are not protected. If you pay a higher premium because of your income, what we call IRMAA, you are not protected. And if you are enrolled in a Medicare Savings Program, you are not protected either. So please do not assume the government has a safety net catching you. For most seniors in 2026, there is no safety net. IRMAA, the hidden income trap. Now I need to talk to you about something called IRMAA. This stands for the Income-Related Monthly Adjustment Amount. In simple words, if your income is above a certain level, Medicare charges you a higher premium. In 2026, if your modified adjusted gross income is above $109,000 for a single person, or $218,000 for a married couple, you will pay more than the standard $200 to $290, and the surcharges climb fast. At the highest level, for incomes of $500,000 or more, the Part B premium reaches $689.90 a month. That is over $8,200 a year, just for Part B. Now, here is the trap many seniors fall into. Medicare looks at your tax return from 2 years ago, so your 2026 premium is based on your 2024 income. If you did something in 2024 that pushed your income up just for 1 year, maybe you sold a house, maybe you took a one-time IRA withdrawal, maybe you did a Roth conversion, maybe you had a big capital gain. That single event can push you into a higher IRMAA bracket for all of 2026, and many seniors do not even realize it happened until they see the higher premium deducted from their January check. So what should you do right now? Let me give you 3 exact steps. Please write them down or pause the video if you need to. Step number 1. Verify your real net deposit and your exact Part B premium. Log into your My Social Security account at ssa.gov. Look at your most recent benefit statement. Compare your gross benefit to the amount that actually landed in your bank account. The difference is what Medicare and any taxes are taking. If something looks wrong, call SSA directly at 1-800-772-1213. Do not call any number you found in an email, only the official number. Step number 2. If you had a major life change, file Form SSA-44. This is the form for IRMAA appeals. It is officially called Medicare Income-Related Monthly Adjustment Amount, Life-Changing Event. You can download it directly from SSA.gov. You can file this form if you retired, if you stopped working, if your spouse passed away, if you got divorced, if you lost a pension, or if you had another qualifying life event. Many seniors do not know this form exists. Filing it could save you hundreds, even thousands of dollars a year. Do not skip this step if it applies to you. Step number 3. Check if you qualify for a Medicare Savings Program or extra help. If your income is limited, your state Medicaid office may pay your entire Part B premium for you. That is the full $290 every single month, completely covered. That is over $2,400 a year back in your pocket. There are 3 programs to look at. They are called QMB, SLMB, and QI. You can find them on Medicare.gov, or you can call 1-800-MEDICARE. Kaiser Family Foundation estimates that more than 7 million seniors already spend over 10% of their income just on Part B. If that is you, please check your eligibility. The hidden mistake. The one that costs the most now. I promised you at the beginning that I would reveal the hidden mistake. The one many seniors are making right now without even knowing it. Here it is. The biggest mistake is not the COLA. It is not even the Part B premium hike. The biggest mistake is failing to file Form SSA-44 after a life-changing event. Let me explain why this hurts so much. If you retired in 2024, or your spouse passed away, or you stopped working, or you lost a pension, your income 2 years ago looks much higher on paper than what you actually make today. But Medicare does not know that. Medicare just looks at the old tax return and assumes you still earn that much, so they charge you the higher IRMAA premium. Sometimes $300, $400, even $487 extra every single month. That is up to $5,800 a year in extra premiums you should not have to pay. And the worst part? Most seniors never file the appeal. They just accept the higher premium. They think it is a permanent rule. They think there is nothing they can do, but there is something you can do. The form is free. The appeal is free. It takes maybe 30 minutes to fill out. And if you qualify, the savings start within a few months. Please do not let this be you. If you had any major life change in the last 2 years, go to SSA.gov today and look up Form SSA-44. My friend, I want you to remember something. The government will not call you to remind you about your rights. The Social Security Administration will not send you a personalized letter explaining IRMAA appeals. Medicare will not mail you a brochure about hold-harmless protections. These rules exist, but they only protect you if you know about them and act on them. That is why I made this video, not to scare you, but to give you the truth, in plain English, the way I would explain it to my own mother or father. So here is what I am asking you to do today. Do not rely only on YouTube notifications to stay informed. YouTube changes its rules all the time. Sometimes my videos do not reach you, even if you are subscribed. So please take action right now. Hit the subscribe button. Then click the little bell icon next to it and select All Notifications. That way, the next time a new rule changes your Social Security, your Medicare, your pension, or your taxes, you will be the first to know. And if this video helped you even a little, please share it with a friend, a neighbor, a brother, or a sister who is also on Social Security. They may be losing money this very month and not even realize it. Leave me a comment below. Tell me your state and your age. Tell me how much smaller your January check looked compared to what you expected. I read every single comment, and your story may help another senior watching this video. From all of us at TaxWise Seniors, thank you for trusting me with your time today. Stay strong, stay informed, and remember, your benefits belong to you. You earned every single dollar. Now let's make sure you keep them. This is Masha. I will see you in the next video. Take care of yourself, my friend.